folks. You know what's the best part about organizing the event? The best part about organizing the event is that you're writing it, you're producing it, you're filming it, and you're the sound director at the same time. Folks, we're about to start. And I'm very excited to start because this panel is golden. This panel is, I'll be honest with you, I'm a little bit intimidated by this panel. So if I can ask my team to calm down, quiet the crowd a little bit, what I usually do is I shush them. I just say, folks, we're about to start, and I'm very excited to start. Okay. So once again, my name is Samir Azizi. Welcome everybody. I'm the co-founder of Toronto DAO. And once again, I'd like to say thank you to our sponsor, BitBuy Exchange. Let's give them a round of applause. Okay, so our topic today is where blockchain meets Bay Street. And that topic is something that is really kind of being discussed by everyone. This topic is not just in Canada, it's in the United States. We're finally getting closer to traditional finance. The intertwining is happening, and more people want to talk about it. If I can ask my team to please control the crowd in the back. All right. That is why I have this panel of amazing speakers. I have Dean Skurka here. He's the president and CEO of WonderFi, which is a publicly traded parent company of BitBuy Crypto Exchange, which is our sponsors. Thank you. Round of applause. We have Rachel Kirkwood, investment and product specialist at 3IQ. We have Alex McDougall, the president of Stablecorp and recently president of Futr. And of course, we have Mohammed Muraj. He is the Counsel of Emerging Companies and Blockchain at Torys LLP. All right, so this panel is going to be a fast one. I'll be honest with you, I personally don't like long panels. My attention span is very short. So I want to give a heads up to our respected speakers. Please be brief, and if you see me raising my hand really slightly, that means you have around 10 seconds to finish up your thought. All right, so let's do a warm-up question. In one sentence, on Bay Street, what's still the most common misconception about crypto right now? Who's going to go first? Dean? Rachel?
Okay.
Crypto has no use.
Wow, that was a quick one. All right.
I would say outside of Bitcoin and Ethereum, nothing makes sense or has any value.
All right. Alex?
Mostly still criminals.
Yeah.
All right.
Yeah, same thing. Criminals.
Same criminals. All right.
Any self-respecting criminal only accepts USD, but it is what it is.
I love that. All right, Dean, let's start with you with the quick rapid questions. Dean, Robinhood just agreed to buy WonderFi for roughly $250 million, integrating BitBuy and CoinSquare into its global crypto arm. So with that being said, what strategic doors does that open for you and for Canadian investors looking to move seamlessly between Bay Street style regulated products and the broader crypto market?
Yeah, I think for our users, it's a really exciting opportunity. Robinhood is a household name globally. It's one of the leading fintechs in the world that has one of the best products and, of course, isn't in the Canadian market today. They've obviously built up a business through traditional financial services and have recently grown their crypto business. They have one of the largest crypto businesses in the U.S., and they've really rallied around crypto, the users, and the offerings that can exist in the U.S. and globally. They recently closed the acquisition of Bitstamp, which gives them a big footprint. Yeah. So it gives them a big footprint in the EU. And now with Canada, they're going to have a similar footprint here through our platforms, BitBuy and CoinSquare. And, from a user perspective, we're really excited to bring their infrastructure, their product into the Canadian market. And we think there's going to be a lot of exciting developments for our users and provide, a really competitive offering moving into the future for Canadians and for our users in particular.
Personally, I gotta have another question for you, Dean.
I love Robinhood. I actually been a beta tester of Robinhood back in 2014. I was still in college in California. And I heard that Jared Leto invested in it, Snoop Dogg invested in it. They're probably all low-key billionaires right now. But it's such an exciting news that Robinhood is doing this entrance into Canadian market through you guys. So that's awesome. Dean, my next question. Canada was first out of the gate with spot Bitcoin ETFs and their stock of multi-asset crypto ETFs next. How's BitBuy positioning itself to channel ETF-driven inflows? And what does that convergence of listed funds and on-platform trading look like to you?
Yeah, great question. We look at Bitcoin ETFs as the gateway for participants that have not yet exposed themselves to cryptocurrency. And so you think about people on BitBuy today, they're comfortable opening up accounts, they're comfortable sending in Canadian dollars, buying Bitcoin, Ethereum, Solana, etc. The people primarily buying the ETFs are less comfortable with these platforms, and so they're more comfortable buying an ETF in their TFSA or RSP or their traditional brokerage accounts. And we can't help but believe that unlocks the start of a journey where they become more invested in crypto. They learn more about Ethereum and some of the other alternatives that exist in the industry itself. And from there, when they look for avenues to get exposure to these other assets within crypto, inevitably they'll end up at platforms like ours. So we look at it as really expanding the universe of participants in the industry and starting the journey for people that haven't otherwise gotten exposure to this asset class. And we believe strongly from there, they're down the rabbit hole, and it'll eventually lead to other assets. And when they look to buy other assets or stake assets, as an example, they'll need platforms like ours.
It's funny. I personally saw hardcore crypto folks in my close circle said, you know what, I actually invest in Bitcoin ETFs instead of Bitcoin just because it's easier and I can move my portfolio into that. And I personally felt like I was betrayed, because I thought we were all here crypto maxis, and all of a sudden he's like, no, I have my pension fund or something, because that's easier. But the worst part about this, or maybe the best part about this, is it makes sense. So with that being said, talking about ETFs, I'd like to switch to Rachel. Rachel, you now, as 3IQ, run spot Bitcoin, Ether, Solana, and as of last week, it's Ethereum ETFs. With that, what's that?
It's an XRP ETF last week.
Sorry, I meant XRP. My apologies. With that lineup in place, what's the next asset you'd like to wrap? And what still blocks it? What are the blockages for that?
So there's a couple factors. I think I'm just going to talk about two, really. The first factor, we're an OSC regulated firm. So we're an asset manager who produces digital asset ETFs. And really what the first kind of hurdle we have to go over is the OSC essentially wants, and they've published this on their guidelines, they want to see a regulated futures market for the underlying asset. So basically Bitcoin, Ethereum, Solana, and XRP exists on the CME exchanges today. And that is something that they require for us to get approved with a prospectus. The second factor is, though, if you take the market cap of anything after Bitcoin, so Solana, XRP, or Ethereum, and you compare it to the market cap of Bitcoin, I'm going to use Solana for example, and then you look at the Canadian ETF marketplace for digital assets, we see a mirror image of the percent. Say Solana is 3% of the price of the market cap of Bitcoin, like approximately. We notice the same phenomenon in the Canadian marketplace for the ETFs. So essentially, we feel that the total addressable market that attain within the ETF landscape only kind of shrinks as we go downstream in market cap. And, if you looked at the next asset that we would do then, if you were following by market cap, I'm not saying we are.
I really got to know that. Which one is the next? Right?
It's not. Look at Tron. The total addressable.
All right. We have the first option.
The total addressable market would be 65 million. There are 6 ETF issuers. It just doesn't become commercially viable for us to list that and compete for those assets. Although we have had great success with Solana and XRP to date. But essentially, we believe the market will come to us. So as these assets prove themselves with utility and viability, their market caps will grow, and we have the templates and operational excellence to list them.
So I want to ask this, because this is really exciting for I guess more daring investor. Even the ETFs, in crypto, it's still kind of like, oh, kind of sounds alternative. But the volatility still makes pension boards really nervous.
Yes.
And so my question to you is,
What single metric or story finally gets a conservative risk committee to approve a long-term crypto suite?
So on the macro on the story front, essentially we're kind of past the point of everyone knows what Bitcoin is. What we are seeing is like the macro story is Bitcoin a store of value, is it hedged against inflation, and we are seeing large institutions be more curious about how they can harvest alpha from Bitcoin. So essentially, this is an emerging market, and there are emerging managers in the space that run strategies on top of Bitcoin. So it might not be direct access into Bitcoin, but it is basically how could we extract value from Bitcoin. And then if you had to pick a metric, Sharpe ratio, essentially the Sharpe ratio is for every kind of unit of risk that you add, how much return do you get? And this is a quantifiable value that you can now present to a pension board or an institution. And essentially, if you have a traditional 60-40 portfolio with equities and fixed income, and you add a small sleeve of Bitcoin, you actually see an improvement in your Sharpe ratio. So there's a quantifiable factor that we can give you.
All right, from ETFs to stablecoins. Alex, your turn.
I'd like to ask you a few questions. QCAD, which is a stablecoin that is pegged to Canadian dollar, QCAD adoption has accelerated since Stablecorp's May 2025 funding round with Coinbase Ventures, which framed the token as, and I quote, critical digital money infrastructure for Canada. So my question to you is, what finally took Bay Street desks from interesting demo to treating it like QCAD is the real cash?
Yeah, and a little bit of it is finally getting a regulatory framework somewhat in place in Canada, and it's a little bit of a still emerging regulatory framework, and we're still kind of in the final process of it. The amount of inbounds that we get from banks, from pension funds, from institutions, from all of these players around a Canadian dollar stablecoin, given the global happening that's happening in stablecoins right now, is unbelievable, though. So I would say that Bay Street still hasn't quite kept to, this is the equivalent to cash, but with the volumes that US dollars and US dollar stablecoins are doing, everybody's paying attention. And with the fact that the OCC and the American regulators are really pushing their banks to get more involved in digital assets and get more involved in issuing stablecoins, the Canadian banks are paying attention. They're obviously second movers, and there are really, really innovative ones amongst them. But it's still a emerging process. But we're right at the time where all of this is about to take off.
This actually, it clicked for me twice, and I'll tell you that. But first of all, to my teammates, please control the crowd for the sound. This is a grassroots organization, so sometimes we have to run around and ask people to be respectful. But stablecoins clicked for me twice. First is when I started receiving my salary in stablecoins from a client abroad. I was receiving USDT. Declaring taxes and all that, so I'm speaking about. That was like, for me, it was like, what the hell moment. It's like, is that easy? And the second one is that when I had to pay someone a $100 fee for a contract that this girl did do for me across abroad. And that was so quick and easy, and it was so fast. And I was like, oh my God, this is the future. And it's finally catching up to us right now. And I can see that in Canada and in the United States as well. Let's switch a little bit to Futr. Futr launched in April as an AI platform that pays users in tokens for sharing data. And I saw your post recently on LinkedIn. And once again, congratulations on the new position. In one sentence, how does those rewards work? And why should Bay Street institution pay attention to that type of thing?
If ChatGPT and Dropbox had a baby that paid you for its data and solved all of your problems, that's basically how this works. It's an AI agent framework that's working with all of your data and using the same level of intelligence and actually bringing you into the value chain and rewarding you for all of your data, creating massive convenience, optimizing your cash flow, optimizing your payments, finding everything for you. There we go. We're back on. And really, we're using the Futr token as a rewards mechanism for all of these, bringing people into the value chain on the data side. And it really hits from a Bay Street perspective. AI agents, one of the hottest topics that's out there right now. 50% of the current startups in Y Combinator are AI agent focused. Coinbase has a view that the agentic web is paying each other in stable coins is going to be the largest driver of value over the next 3 years. Digital asset currency and data monetization, just really high things.
You know, I actually feel like if I'm feeding my data and I'm training some LLM without knowing about it, at least they should give me some talking for that. So definitely I'm going to be following up on that and looking at it closely. Now switching back to stables, Mohammed, stablecoin guidance is still evolving in Canada. What's one clarification would unlock real institutional use of CAT-backed coins?
So from my perspective, I think stablecoin shouldn't be a security. And it was viewed as what it truly is, which is a payment instrument, because that's why you would buy a USDC, etc., is to pay, not because you think the USDC will be worth more than $1. Then you would really see its full potential be unlocked, and it would also, I think, allow for more commerce on Web3 to occur. So, for instance, like like in 2000s, you had like pets.com and things like that coming on to the internet, but they were like colossal failures. And the reason for that was not because it wasn't a good idea. You can definitely buy pets online, you can buy cars and everything. It's just because the ecosystem didn't exist. You didn't have the same day delivery. You didn't have the same penetration with credit cards. So although the ideas were good, they were a little bit ahead of their time. And once the ecosystem catches up, then you can really see the true potential. And so here is the same thing, Web3 exists, but many of us don't transact on it because the ecosystem doesn't exist. So with stable coins and other payment instruments and actors entering in, the ecosystem will begin to form, and that's when you'll really see the true potential actually be realized and unleashed.
That's really interesting. And I actually wanted to ask you, if it was up to you, if you could tweak just one statute to make Canada the go-to TradFi meets crypto hub, which would you amend and what line would you add?
So actually, I would amend our Retail Payments Activities Act, and it's a very short amendment. You just need to, because right now our Retail Payments Activities Act says it regulates all payments instruments, but it actually carves out crypto. So if you just cross off the accept crypto, all of a sudden the RPAA regulates crypto and stable coins. You can make an argument should be a payment instrument and not a security instrument.
All right, let's switch to a bit of a crosstalk. But before we're going into that, I wanted to say that it's somehow we have a feeling that the floodgates are opening and we're about to cross that bridge and we will have that legislation. So, Mohammed, I hope we can talk more about this later, especially on the legislation side, and maybe we can contribute to that as well as Toronto DAO.
Sure.
So let's do some back and forth. What single change, and that's the question for everyone, but everyone can jump in or you can skip this question. What single change, tech, policy, or mindset gets Bay Street fully comfortable moving millions and billions on chain?
Security. The feeling that I might put $1 billion on chain and someone can steal it from me or turns off the Wi-Fi and I can't get my access to it, I think that poses like a lot of anxiety and creates a lot of friction.
All right.
Consistency and existing models that have proven that it works. We see it in other jurisdictions of, hey, $23 trillion was moved in stablecoins last year, but we haven't done it domestically. And the Canadian dollar kind of quietly kicks ass, right? Like it's the 5th highest reserve currency in the world. There's $400 billion of FX that happens a day with it. There's a ton of volume in this currency, all of which can be done better with stablecoins, but we need to have those examples and we need to have those proof points, and that's what really starts getting Bay Street going, and the fact that they can make more money and save more fees on it.
Dean, Rachel?
I was going to say a regulatory framework on all, basically endorsed by the OSC.
She stole my answer, so next question.
All right, let's close it up, everybody. Final question, just one sentence from each of you. By 2030, blockchain's biggest win for Canadian finance will be ...
Tokenized assets.
Unlimited credit from anywhere in the world in real time.
An actual initial coin offering.
Anything from you, Dean? Or you?
What was the question?
So, in one sentence, by 2030, blockchain's biggest win for Canadian finance will be.
QCAD.
Oh. Thank you, everybody. Thanks for this wonderful panel, and thanks to BitBuy for sponsoring this event. Everybody, have fun.